Australians are currently facing an unprecedented surge in housing prices. Whether you are ready to accept it or not, in just 5 years, property values in many regions of Australia could double. At the same time, some areas might see price drops of several $100,000. According to data modeling by PropTrack, if property prices continue to grow over the next 5 years at the same rate as the previous 5 years, then by 2030, prices in Sydney, Melbourne, Brisbane, and Perth will skyrocket. In fact, we can see a bit of the future of Australia's property market in 2030 based on the current trend. The numbers tell a clear story. Those who buy now may secure their future, but for those who wait, what lies ahead could be nothing short of a nightmare. Hi, I'm Alex. I hold a master's degree in accounting and have worked as an accountant. I've been a property investor and stock investor for years. Then I started my own company helping hundreds of people invest in the property market to achieve financial freedom and retire early. And you're watching Oz Property Strategy, where I share information about real estate investment, economic trends, and wealth creation. If you like this video, smash the subscribe button and turn on the notification bell to watch new weekly videos. Without further ado, let's get into it. Recently, I read an article on real estate website that predicted the median price for houses in Sydney could rise from the current 1.49 million to 2.4 million, a staggering increase of 61%. When I first heard this number, I was stunned and then skeptical. However, after reviewing the analysis presented in the article and looking back at Sydney's historical housing market performance, I calmed down and did the calculations myself. Surprisingly, the figures seem reasonable, even slightly conservative. Let's take a closer look at the projected property prices across Australia's big cities for the next 5 years, that is, up until 2030. What's driving these projections? What factors are behind this long-term upward pressure on housing prices? Last month, the federal Labor government was re-elected and is continuing its policies from the past 3 years, including an ambitious plan to build 1.2 million new homes by 2029. As we've discussed in many previous episodes, the target is essentially impossible to achieve. Based on the current progress, there will be a shortfall of about 460,000 homes by 2029. This alone strongly suggests housing prices will continue to rise over the next 5 years. Of course, many other crucial factors also affect property prices, which we'll explore later in this video, but limited supply remains one of the decisive elements. Before we dive into PropTrack's predictions for future prices, let's keep a couple of important points in mind. First, these predictions assume the market trends of the past 5 years will repeat themselves in the next 5 years. Whether this will happen again and to what extent is something nobody can be sure about. Second, PropTrack is affiliated with Real Estate, Australia's largest real estate advertising platform. Real Estate's market value is approximately 10 times that of its closest competitor, Domain. Therefore, it's understandable that PropTrack's analysis and opinions tend to align closely with Real Estate's interests. Real estate benefits most when there is higher market activity, as it means more advertising and high fees per ad. The best scenario for a dominant player like real estate is a booming property market. As for how much PropTrack's optimism is exaggerated, we can't say for sure. It's fine to use these projections as a reference, but we shouldn't trust them blindly. With these precautions in mind, let's delve into PropTrack's detailed analysis. According to PropTrack, by 2030, house prices in Sydney are expected to rise by 61%. Brisbane could see a rise of 68%, Melbourne 17%, Adelaide a dramatic 75%, Perth 66%, Hobart 41%, Darwin 30%, and Canberra 40%. After reading this expert report, I wonder how those people who think Brisbane and Perth prices have already risen too much to go higher, or those who are betting on Darwin for speculative reasons, will react. When it comes to investing, many people believe they're clever enough to pick the next hot market and time their purchase perfectly at a low point. However, no one truly knows what the future holds. Investing works precisely this way. You must thoroughly understand the rules of the game before entering. Only when you're confident of your advantage should you proceed. If you don't know the rules and rely purely on luck, you're going to need a lot of it. And you don't want to need a lot of luck because it comes and goes. Our philosophy at Oz Property Strategy is not based on luck. The investment strategies we design for our members are tailored to their personal situations and strongly emphasize stability and diversification. After establishing a robust investment portfolio, we then explore strategic market timing and identify opportunities for explosive growth. This approach ensures that, in the long run, your investment consistently outperforms the market. Next, let's examine the predicted housing price trends for each big city over the next 5 years, including key regional market trends, to help you understand and prepare for the property market through to 2030. If the growth seen over the past 5 years continues, by 2030, the price of a typical standalone house in Queensland could reach 1.53 million. Between 2020 and 2025, Queensland's house prices surged by 68%, while apartments rose by 53%, reaching a median price of $642,000. Breaking this down further, the areas projected to experience the largest growth are likely to be regional town centres and outer suburbs of major cities, places like Logan, Ipswich, White Bay, and Central Queensland. If you compare all 8 Australian states and territories, anyone who bought property in Queensland over the past 5 years probably made a good investment. A substantial influx of domestic and international migrants, particularly young and middle-aged people from New South Wales and Victoria, has boosted productivity and energized Queensland's economy. It's increasingly diverse, great for workers, and the properties are inexpensive, with government incentives making it even more appealing. Honestly, I've even considered moving there. Queensland has always been a prime domestic migration destination, and the pandemic greatly accelerated this trend, significantly driving up property prices, especially in regional towns and developing suburban areas. Our Vision members who bought properties in Ipswich, Logan, and Gold Coast have seen substantial value appreciation. Some properties we manage for members have rental yields reaching as high as 8%, with some even hitting 10% through short-term rentals. We're preparing detailed case studies which will soon be published on our website for your verification. Many of our members have already leveraged this growth, refinancing their properties to invest in additional homes, effectively building their property portfolios. If PropTrack's predictions materialize, Brisbane suburbs currently at a median price of $500,000 could rise to $800,000, $900,000, or even surpass the $1 million mark within 5 years. Suburbs currently averaging $800,000 could increase to $1.3 million. Southern suburbs near Brisbane's boundary with the Gold Coast City Council are already approaching the $1 million mark. At the premium end, areas like Surfers Paradise, Mermaid Beach, New Farm, and Minyama are expected to surpass $6 million. I know many locals in Brisbane find it hard to believe that places like Ipswich and Logan, long considered undesirable due to their perceived low socioeconomic status, could ever reach the $1 million price point. But does socioeconomic reputation really matter that much? Over the past few years, we've seen that suburbs with poorer reputations and lower demographic profiles have often experienced the most dramatic price increases. For example, Emmerdale in Perth and Elizabeth in Adelaide. Locals often look down on these areas, yet their percentage gain outpaces even many premium suburbs. This highlights the benefits of population migration and urban development. Remember, we are investors. Don't let personal feelings drive your investment decisions. Even if I don't like a house or would never live there, I'd still buy it if it can make money. After all, I'm not the one living in it. After Brisbane, let's take a look at Perth. Given Perth's strong housing market performance over the past 5 years, particularly post-pandemic recovery and population-driven supply-demand imbalance, mainstream forecasts and data models suggest that if current trends continue, Perth property prices will hit record highs again by 2030. The median price for standalone houses could exceed $1.4 million, with apartments reaching around $650,000. In the last 2 years, suburbs on Perth's outskirts or emerging areas like Beldivis, Butler, Ellenbrook, Redcliffe, and Currumbin have seen annual increases of 25% to 40%. These areas lead the market due to lower base prices, rapid population influx, and improved infrastructure. Premium coastal suburbs like Scarborough, Cottesloe, and Fremantle have also seen steady growth driven by lifestyle appeal and high-end buyer demand. Inner city and mature suburbs like Subiaco, Mount Lawley, and Bayswater have enjoyed stable annual growth rates of around 6% to 8%, thanks to their proximity to the CBD and strong educational resources. Perth price growth follows several clear trends. Number 1, population inflow and housing shortages. Perth population growth rate is the highest in Australia at 2.8%, yet new housing construction has lagged significantly behind demand, pushing prices upward. Number 2, outer suburbs catching up due to spillover from central areas. High prices in core areas lead buyers outward, causing even greater price growth in outer suburbs. Number 3, improved infrastructure. Areas with new transport, commercial and educational developments, such as Redcliffe's airport redevelopment and Heathridge harbour projects, lead to price increases. Number 4, high rental yields attract continuous investment, which in turn further supports property prices. Now let's take a look at Melbourne. given its comparatively poor performance over the past 5 years. Interestingly, despite knowing Melbourne's underperformance, only 10% of Melbourne-based investors bought interstate properties compared to 40% in New South Wales in 2024. Now, when my Melbourne fans join our Vision membership, I'll tell them they might as well buy locally, saving me the time of educating them. But that's the past. What about Melbourne's future? PropTrack predicts that over the next 5 years, Melbourne will see family-friendly suburbs leading the price growth, with some areas expecting six-figure gains. Suburbs like Lower Plenty, Diamond Creek, Beaconsfield, and Romsey will outperform traditional blue-chip areas like Toorak. Melbourne's future property market leaders may not be well-known affluent areas, but rather these newer, family-friendly suburbs with excellent amenities. Institutions like PropTrack and CoreLogic expect Melbourne property prices to increase by about 40 to 50%, roughly 7% per year. Of course, regular viewers of this channel will ask, given Victoria's tax policies targeting property investors, can Melbourne's prices still rise? My view is, yes, they will rise, but holding costs will also increase. If you're interested in this topic, please check out APS 078. Sydney. When it comes to Sydney, I feel very qualified to speak. I've lived here for 20 years and my company headquarters is here. Sydney's performance has been strong over the past 5 years, though not quite as good as Perth and Brisbane. If Sydney maintains this pace, median house prices could hit 2.4 million by 2030, nearly 1 million above today's 1.49 million. Apartment median prices will reach a more moderate 880,000. Premium areas like Bellevue Hill could see median prices surpassing 13.5 million by 2030. Sydney's property market growth is driven by several key trends. Number one, emerging suburbs benefiting from major infrastructure projects such as the Western Sydney Airport and Metro Lines. Areas like Gregory Hills, Leppington, and Rouse Hill are seeing sustained population inflows, driving both prices and rents upward. Number two, secondary hubs like Parramatta and suburbs like Dundas and Lane Cove attract professionals and immigrants due to employment and transport advantages, leading to steady price growth. Number three, high-end coastal and traditional affluent areas, including Bellevue Hill, Vaucluse, Mosman, and Double Bay, will remain strong performers due to their scarcity and high-end market appeal. Factors driving this include ongoing population growth, undersupply, significant infrastructure upgrades, continued immigration, and investment demand. So will this kind of growth really happen? Remember those 2 points we mentioned at the start of this video? First, this analysis and projection are based on the assumption that the price increases from the past 5 years will repeat themselves. Second, the forecast comes from PropTrack, which, let's be honest, is part of realestate.com.au. So of course, they have every reason to paint a rosy picture. Let me share my personal view and I welcome your opinion in the comment section. In my view, the price growth we saw over the past 5 years is unlikely to happen again, unless all the underlying conditions remain exactly the same. For example, borders closing, inflation surging, the government injecting massive liquidity into the economy, and then ramping up immigration. Meanwhile, land supply remains constrained, and the pace of construction can't keep up. Even when it comes to interest rates, I can only see trends 6 to 12 months ahead. Beyond that, no one knows what's coming in the next few years. Just like I explained in my previous videos, more and more people are being priced out of the Australian housing market. Those who already have mortgages are still under cash flow stress. But at the same time, Australians' population keeps rising. The government keeps releasing new policies to encourage home ownership. Loans are becoming easier to obtain, and housing construction just can't keep up. So what's the long-term future look like? Number one, those who can't compete in the market will be forced to move further away to more affordable areas. This is driving a wave of interstate migration. Number two, prime locations in big cities are being taken up by wealthy new migrants and affluent locals. Number three, people with slightly less financial power are being pushed into the outer suburbs, buying up properties there. And those selling, they're either retiring or moving to places where housing is cheaper. It's starting to feel like a population reshuffle based on financial strength. The rich settle in and the less wealthy move out. Number four, more and more people can no longer afford houses, so they turn to cheaper apartments or give up on buying altogether and become lifelong renters. But buying an apartment or renting for life often means getting stuck in the poverty cycle, with no way to leverage real estate wealth to move up. So if you're watching this and you dream of climbing the social ladder and achieving financial freedom through Australian property investment, come and talk to us Property Strategy. All our Vision members are already moving forward on this journey. If you've made it this far, please give me a thumbs up, subscribe, and share this with your friends. Turn on the notification bell to watch new weekly videos. And have a good one. Bye.